Everybody, Mike DeSepoli, Heritage Financial Advisory Group. Welcome to the Heritage Market Pulse for Friday, March 25th, 2022. We hope you're all having a great week. Got some things to update you on since our latest video, some developments in this market and the economy. So let's get right to it. To start with our major market averages, let's take a look at the NASDAQ here, right? Looking at a 6-month view of the NASDAQ. We have seen a very nice move off the recent low. A lot of buyers stepping in, a lot of volume behind those buys, which is good. Tells us that it's meaningful. People are seeing opportunities and discounts in this market, and they want to take advantage of it. Not much has changed since we last spoke on Tuesday. Let me just zoom in a little bit, looking at the 1-week view. A lot of chop going on in the market right now, right? Had a nice rally yesterday, a little bit of a give back today. That's quite all right. Anytime you have a market that moves off the lows in this type of a swift fashion, it is normal for us to see a little bit of a pause, maybe a little bit of a backfilling, testing some recent levels. And really, let me zoom in a little bit here. That's kind of what you're seeing, right? We get the big move off the low. You get a little bit of a pause here on the 21st, another big move on the 22nd. We get a pause on the 23rd, move up on the 24th, and a pause on the 25th, right? So if you notice a pattern, it's like we're stepping up the stairs here. That is good progress we want to see. And more importantly, even on the down days, we're seeing good market internals where there's a lot of activity under the hood that looks a lot better than what you would expect to see on a day with the market down. As a side note, I think the market is queuing off of this report of a huge fire at a Saudi Aramco oil facility in Saudi Arabia. There was initial reports that it might have been hit by some missiles. So again, markets trade very light on Friday, light volume, not a lot of people putting money to work. So news stories like this can exacerbate some of the moves and essentially take hold or take hostage the market for a particular day. But we're not down much right now. NASDAQ's down about 110 points, less than 1%. So, we're starting to see smaller moves, a little bit more compressed moves that we had all gotten used to. I don't know if I should say used to. We had all gotten kind of accustomed to some of these big 2, 3, 4% daily moves that we've seen over the last 6 months. And now volatility is starting to come back down a little bit, which is good for normal market conditions returning. And I'm sure a lot of investors out there are happy about that as well. So let's take a look at where we're at. Again, not much has changed since we last spoke on Tuesday. Just to give you an idea of what we're watching, number one, we want to keep an eye on this level right here. Let me just make it a little larger so we can see it. Right, this line in the sand is some overhead resistance. When we talk about resistance, it's a level in the market that the market has had a little bit of trouble getting through in the past. If you look back here on February 1st and then again on February 10th, the market tried to penetrate this level on the NASDAQ, which is, let's call it 14,500, was unable to get through it and had rolled over at those times. So again, third time may be a charm. We'll see. We want to see the market continue to move up into this level and then, of course, make a meaningful break above it and now turn what is currently a resistance level into a support level. And we'll do that by getting above it, and then that will become, hopefully, the new floor for the market. As far as other levels to watch right now, the psychological level, of 14,000 on the NASDAQ, right? We've talked to a lot of folks this week, told you that we're watching that psychological level. We want to see the market get above and stay above this 14,000 level. So we are above it right now, 14,083. We were a little bit higher yesterday. So again, want to see, can the market digest in this area without giving back too much? And then move up towards the resistance point and break through. But all in all, a lot has changed in a short period of time. Let me just reframe here, right? We've had a nice bounce coming off of the lows. It's a very big move, about a 12% move in the NASDAQ. So still work to be done, but this is the type of activity that you want to see in the markets. Let's take a look at our heat map. This is the intraday heat map, the one-day breakdown of the different sectors in the market. So like I talked about, right, markets are down. You would expect that most stocks and investments are down. But when we look across the heat map here, we are seeing a mixed bag across the board. Big tech, after a big run recently, is taking a little bit of a breather today. We have energy is higher today on the back of that report about the bombing at an oil field. Naturally, you're going to see a spike in energy prices. And, overall, pretty good dispersion across the market, good diversification, and a decent number of sectors are rallying. When we look back over the last week, again, it's been a pretty good week. We've seen that technology, software, semiconductors part of the market lead, which is what we want to see. And when we go back and look at the last month, it's been a pretty good road, folks, right? Since those lows have been put in place, we believe they've been put into place Again, it's only a couple weeks here, but we have to, any rally, right, has to start at a pivot point, and then we need to build upon that rally and continue to gain momentum. So we'll see where we go from here, but so far the action is constructive, and we believe the lows are in place for the market to move higher. Let's take a look at investors. Check in on investors and investor sentiment. Okay, sentiment's moving up a little bit. We just edged out of the fear category, right? Investors now, the reading on this scale is 46, which is a neutral reading. So we've come up off of a week ago, we were at 37 in fear, and a month ago, we actually had bottomed out somewhere around 16 in the extreme fear category. So even with the recent rally, the fact that investors are still very unsure of themselves, they're still not, maybe 1 foot in the water, not sure if this is the real deal, maybe we're going to roll over again. This is good. It's a good contrarian indicator. We don't want to see the rally like we just had, and we swing from extreme fear to extreme greed, right? Because then that would tell us that we're going to run out of buyers, and if we run out of buyers, markets are likely to go lower yet again. So that's not what we're seeing, but again, we like to keep an eye on this just to get a gauge on investors abroad here. So let's take a look at some other data points that we thought were very important. Last week, we actually saw some historic moves in the market. Okay, what we had was 4 consecutive days with the S&P up by 1% or more. And I know after a big correction, it doesn't really feel like much, but this is something that's very rare. It's actually only happened 5 times in the history of financial markets. And we look back on the returns that followed those periods of 4 consecutive days of 1% gains or more. And they are astonishingly positive, folks, right? You could see it for yourself when we have had these occurrences in the past. Returns were positive 1, 3, 6, and 12 months later, and they were handily positive at that. So again, this is just a data point that we wanted to focus on. Something that doesn't happen often. We think it's pretty meaningful that a lot of buyers stepped in. They did so over a longer period of time. It wasn't just a couple minutes or a couple hours, but 4 consecutive days of high volume buying is a good sign for us. Another thing we wanted to talk about, excuse me, is a lot of folks that we've spoken to, both clients and outside of our firm, have talked about how people think that the bull market or that the markets in general need to roll over because we've been in a bull market for, quote unquote, so long. And actually, we have a different view of that. We did go into a bear market back in the pandemic, March of 2020. And that was when we came out of that, when markets rallied out of that, that was the birth of a new bull market. Okay. So when you look at where we are in comparison to other bull markets in the past, this might be, let me see if I can zoom it in a little bit, but I don't think we can get any bigger, unfortunately. So when you look at all these different bull markets, the one that we are in is this dark blue line that's running up top here, right, folks? So we are basically at this point where my mouse is hovering. We're about 2 years into this bull market. And when you look at history and when you look at other bull markets of similar circumstance or that started around a similar point and had a very impressive first 2-year rally off the lows, you can see that markets have a lot left to go if the bull market remains intact, which we believe it will. You look at some of these other rallies that went on for 6, 7, 8, 10, even 11 years, right, before they eventually peaked out and went back into a bear market. So the notion that this bull market has been around forever, we think is false. The bull market from 2009 died in 2020, and a new bull market was born in April of 2020 that has carried us to where we are today. So where we've been does not indicate where we're going, and we wanted to give investors a perspective to talk about this and say, look, bull markets, when they get going and they really get some nice momentum behind them, they can go on for years and years. That doesn't mean we won't have pullbacks. That doesn't mean that we won't have corrections. We certainly will, and we certainly just did, but it's healthy for the market to catch its breath, to re-energize and get ready for the next move higher. So again, today, a little bit of a down day, not a big down day, but some pullbacks across the board. Very normal after the run that we've seen. Investors reassessing geopolitical headlines. We're going into a weekend, so maybe people that were potential buyers, not going to be a buyer today on a Friday, which is a philosophy that we employ here at Heritage as well. So if you have any questions, please reach out to us. But we continue to see the signs that we want to see to indicate that a bottom is in place. Whether we go sideways for a little bit, couple days, consolidate, maybe a little bit of a back test where we go a little bit lower before resuming the upward march. But we feel very good and confident about what we say. So if you have any questions, reach out to us. We hope you have a great weekend, and we'll see you back next week for the Heritage Market Update. Take care.